Hi, I'm Jenny Brown. Welcome to this week's edition of MFB News. I'm sitting here at my house office, as it were, in Sevenoaks, and it's like a snow globe outside still. I hope wherever you are, the snow hasn't been too bad, and if it was bad, at least you got to go at it and make snow angels and snowmen and have snowball fights. And I think there's more coming next week actually, so brace yourselves. Now, in terms of what we've got for you this week, we're going to go through our usual update on what's been happening with mortgage rates. Some really good news. We have seen a kind of flurry of downward pricing in the last week, so we're really going to bring you up to speed on that. We're going to share a brief bit of lender criteria change as well that's been announced in the last 7 days. We're then going to talk a bit about what's happening in terms of the prospects of the UK entering recession this year. We're then going to give you the opportunity, or show you how you can have the opportunity to have a voice in terms of how landlords are represented in the upcoming spring statements of the budget, essentially. You do actually have the ability to kind of have a say. And I think, this really represents a good opportunity for landlords to have a voice and share their thoughts. And then finally, we're going to wrap up with this week's question of the week. So last week we talked about the fact that swap rates had stepped down dramatically over Christmas, and that 5-year swap rates were sitting at around 3.3%, so down circa 0.7% month on month. Now, we have seen swap rates go up ever so slightly in the last few days, so we're not totally out of the woods yet, but what did then happen is that lots of lenders came back after Christmas. They've had a look at their cost of funds and they've been comfortable that they are in a position to be able to drop pricing downwards, and I'm sure you would have seen various headlines in the press discussing this. So first of all, in terms of swap rates, where are we right now? And today is Wednesday and it is 7 o'clock in the morning. So 2-year swap rates are at 4.185, 1 month ago 4.624, so circa 0.5% cheaper month on month. And a very similar story actually for 5-year fixed rates as well, so currently 3.587 for a 5-year swap rate. 1 month ago 4.048, so again circa 0.5%, so not quite the 0.7s that we saw last week, but still a significant step down month on month. So in terms of how this is shaken out with the lenders, we have seen a real flurry of repricing actually. So if we just start off with the more high street type lenders, so the kind of lenders that you would find with branches on high streets who do the more straightforward type of lending. So first of all, the Coventry have dropped their pricing down by 0.39%, so their rates are now from 4.66. Accord, one of the largest reductions actually this week, down by up to 0.95, and it does vary depending on the product. So their rates are now from 4.29. And in the vanilla space, we've also seen NatWest, Virgin and Barclays make reductions as well. So these guys are the kinds of people who certainly cap the maximum number of buy-to-lets in the background at 10. They're not lending on any particularly racy properties, and they're certainly not lending to limited companies either. Now, in the specialist end of the market, we've seen many more changes, and this is because of the way these guys are funded. So your high street lenders are partly funded by the capital markets, i.e. swap rates, and partly they're going to be using savers funds to lend the money back out as well. So their cost of funds is partly money markets, swap rates, and partly savings rates as well. So don't forget that base rate hasn't come down. So these guys' cost of funds hasn't dropped across in the round, only certain aspects of how they're funded would have reduced. But in the specialist end of the market, where the guys are much more exposed to the wholesale market, so the swap rates, we've seen a lot more reductions, just to give you some context around why that is. So first of all, we've seen Paragon bring their rates down by up to 0.5%, and actually really encouragingly, they've also changed their rental calculation. And we know that so many people have been really struggling with rental calculations because of the increased cost of mortgage pricing. Lenders have had to kind of scale back how much you can borrow per pound of rental income because they're stressing your affordability against what your mortgage payments could be. So actually a downward step in pricing means that the affordability calculations have some bandwidth to reduce, and that's exactly what we've seen Paragon do. So now their rental calculation would be 125 or 145% coverage, assuming a notional rate of 5% or the product rate, whichever is the higher. So what that means is if you were taking a 5-year fixed rate at 4.8%, then they would be stressing at 5%. But if you're taking a product at 5.8%, that's what they'd be stressing it at. So that's what that kind of means. Now, in terms of their pricing, they've got some absolutely cracking deals out actually. They've got some really good limited company rates and HMO multi-unit rates. With no arrangement fees, very competitive. Pricing starts from 4.45% with fees and 5.25% with no arrangement fees. Now we've seen Landlord bring down their rates by 0.46%, so their rates are now from 4.19. Lendinvest rates are down by 0.8, so their pricing is now from 3.79. CHL down by 0.65, so their rates are now from 3.06. Shawbrook have dropped rates, now from 5.59. We've seen West One reduced rates by up to 0.58%, so their rates are now from 3.84. United Trust Bank reduced rates by up to 1%. They win the prize for biggest reductions this week, I think. So pricing there now from 5.34%. Fleet made reductions. Their rates are now from 4.74. Zephyr Home Loans down by 0.65. And Foundation Home Loans have released some limited edition rates as well, which have got some pretty decent arrangement fees on them, and pricing here from 5.64. Now we're also expecting Kent Reliance and Precise to reprice today. They haven't released the new rates, hence I haven't got them for you, but there is new rates coming out today. So I think the takeaways from this are, first of all, we have seen a step down in interest rates. And as you can see by the numbers I'm sharing, reductions of up to kind of like 0.65, 0.95%. Yet the cost of funds is only reduced by, at the moment, 0.5%. So in terms of how many more reductions we're likely to see from lenders, actually this could be it for the time being. There are a few lenders yet to reprice. So for example, Kent Reliance and Precise Mortgages. There are some definitely more lenders in the vanilla space, so your high street type lenders who are yet to make any reductions. But I think actually in terms of any kind of significant reductions in mortgage rates, we've kind of seen the step down now, and things are going to really kind of plateau for the time being. The other thing just to say is that if you have got a mortgage application ongoing, and I've mentioned a lender, one of the lenders I've mentioned, is someone that you have an application in with, it is just worth checking whether you're able to move your existing application, which would be on a higher interest rate, onto a new lower interest rate as well, just to see if you can save yourself some money there, which, let's face it, is always very welcome. I've just done the same thing myself. I have a limited company remortgage going through with Fleet Mortgages at the moment, and I just phoned them up a couple of days ago and said, you've dropped your rates down, please can I have the new rate? And they said, yes, we're going to charge you £99 to issue an offer on the lower interest rate, so that's really good. Now, in terms of how pricing is kind of shaking out more broadly, so at the moment, if you're an individual and you're looking to borrow against a really standard property, a 2-year fixed rate at the moment without paying a really large fee, so I've kind of tried to find a middle ground here, rates are going to be sort of circa 4.37. Your 5-year fixed rates are from 4.31. Again, there are lower interest rates, but you will pay those really large fees, and there are higher interest rates with no fees attached to them at all. I've tried to find a kind of good middle ground for you to give you a kind of illustration today in terms of where your rates are. Limited companies and specialist lending, so HMOs, multi-units, 2-year fixed rates circa 5.04 and 5-year fixed rates from 4.99. So I hope that gives you a kind of understanding of how the numbers are shaking out at the moment. And like I say, we're not expecting to see another massive flurry of repricing over the next week. We think lenders have really stepped down their pricing in accordance with their cost of funds. The cost of funds has actually gone up since last week, so we're not expecting to see another round of large repricing over the next 7 days. Now, a quick piece of lending criteria change, which is quite a biggie actually. So Shawbrook have made 2 changes to policy in the last week. So first of all, when lending on smaller HMOs, and by this we mean HMOs of up to 6 bedrooms, including 6 bedrooms I should add, they are removing their requirement for experience of a landlord. Now this is an interesting one. So if you are a first-time investor and you're going straight in with HMOs, you will find that there are going to be a lot of landlords who won't lend to you. Why is this? Because actually when you buy an HMO, there can be licensing requirements, certain kind of things that you have to have inside the property. They're a bit more complicated. So also you're going from managing no tenants to managing up to 6 tenants, which can be a bit of a baptism of fire, let's say. So lenders take the view that actually if they're happy to lend to people on HMO properties, but they do want you to come to the table with a bit of experience behind you. Now, there are exceptions to this rule. Shawbrook are obviously now one of them. Kent Reliance would be another one. Landlord can take a view for first-time investors. I think Keystone can as well. So if you are a first-time investor and you're going straight in with an HMO, and understandably so, the yields are really, really good. It can be done, but just know that actually it's not for every single lender. However, Shawbrook are now one of them. The other thing Shawbrook have done is introduce what we call top slicing. Now, top slicing is where if the rental calculation, the standard rental calculation that lenders use is not facilitating the level of borrowing that you're looking for, but you have lots of disposable income personally away from the buy-to-let property, then lenders can look to lean on that disposable income that you have to sort of make up any shortfall. Now, every lender has a very different way of working out whether loans are affordable or not, so it's not something I can kind of give you a sort of set number of or set of metrics to work on today. But if you are in a situation where you've got a property to refinance, it's not quite getting in there on the rent, give us a call and we can run through the top slicing calculations with the lenders. And you know, now this would include Shawbrook as well. So great news from Shawbrook in terms of criteria changes, and I suspect we'll continue to see some lenders tweaking things as we go into the new year. Now, I think we've been also kind of encompassed in interest rates that actually sometimes it's very, very easy to neglect to think about the broader economy. So I read an article in the last couple of days which talks about the UK entering recession or not, and I thought it was worth sharing. So essentially the kind of viewpoint now is that actually the UK will probably narrowly avoid recession in 2024. What they say in this article is that with slowing inflation due to decreased energy costs and the impact of higher interest rates, they anticipate notable reductions in interest rates, and the UK is likely to dodge a recession again, but growth will remain stagnant. What they go on to say that businesses will continue to face challenges due to the lingering effects of high interest rates and a sluggish economy. And this is going to strain cash flows, leading to reduced investment and an increase in business failures. However, there is a silver lining for SMEs: lower debt servicing costs, potential wage increases surpassing price rises, and improved prospects as the year advances thanks to tighter controls of their finances. So I think actually we're no means out of the woods in terms of kind of where we sit as an economy, but actually the point is that we should be looking to avoid recession this year, all things being equal, but it's also going to be a very, very slow, subdued year in terms of economic growth. Okay, now I think often as landlords we feel frustrated that we don't have a voice, that things are kind of put upon us and we don't really have the opportunity or right of reply. So I read an article a couple of days ago which really caught my interest, telling me that HM Treasury has opened its representations portal, meaning landlords and anyone else can submit your ideas for the budget, which is coming up in March. Now, any submission that you make has to take the form of a written statement, with the aim of commenting on government policy and suggesting new ideas which you would like Jeremy Hunt to consider on the budget, like I say, on the 6th of March. So guidance from HM Treasury suggests that any representation should contain policy suggestions and explain the policy rationale, costs, benefits and deliverability of the proposal, and it should also be evidence-based, providing clear arguments on how it contributes to the aims of the budget. Now, I know that lots of landlords have lots of views in terms of taxation for landlords, so I suspect there's already lots of you who might have something to say to Mr Hunt when he's putting together his spring statement. Now, I think it's also just important to say that whilst as landlords we do have a voice and we can actually submit our words, there are also other people lobbying in favour of landlords. So, for example, trade bodies such as the NRLA and Property Mark always make representations. However, it's also worth noting that activists like Generation Rent and the Renters Reform Alliance also submit representations. The more voices that we have going to Mr Hunt in anticipation of the budget, the better. But like I say, just make sure that if you were to make a representation, simply saying you should scrap section 24 as an example, wouldn't that be a lovely thing, isn't going to really cut it. It's got to be a kind of proper proposal. But please do, feel free to get in contact and really kind of champion our landlord community. And finally, moving on to question of the week now, where we are going to discuss the very glamorous subject of Japanese knotweed. So Japanese knotweed became a kind of thing. It became sort of, people were very aware of it. It became a problem years ago, actually. I'm trying to cast my mind back to when this would have been. I mean, it's going to be sort of circa 8 years ago. And when knotweed first kind of got identified as a real issue for properties, lenders kind of made a real sort of knee-jerk reaction, essentially, in terms of how they would deal with properties where there was knotweed in close proximity to their security. And then kind of it went, not quiet because it does come up occasionally, but we have seen a few cases recently where people have found there's knotweed on the property. And actually one of my clients emailed me in the last week saying that they've just found out there's knotweed in the garden of their buy-to-let property, and does it make it unmortgageable? So the very short answer is no, and lenders will tackle the presence of knotweed in very different ways depending on the lender. So some lenders will just simply say, no, we're not prepared to lend on the property. Some lenders will say, look, as long as it's a certain distance from the property, because what knotweed does is it kind of grows underground, gets under the kind of foundations of the property and can cause real structural issues. As long as it's kind of really distant from the property, we can take a view. So one of the things you need to kind of be armed with is the distance from the property of where the knotweed is actually located. Some lenders will say, we're happy to lend where there has been a presence of knotweed as long as it's been treated and the company who have treated it have provided essentially a warranty for the work that they do, which means that if there's any repeat of the knotweed, there's kind of recourse, or likewise if actually the knotweed wasn't treated properly and there's damage to the property in the longer term, again, there is recourse. So that's kind of where lenders sit. So no, absolutely not. If you do have a property with knotweed, it doesn't mean you can't mortgage it, but it does mean that actually you may need to arrange for the knotweed to be dealt with professionally. And I would strongly encourage you to do that because it is really nasty stuff. But likewise, actually, you know, if it's kind of, 10 metres away from the property, there is a strong chance that lenders will take it on nonetheless. And that is us wrapping it up for this week. Thank you so much for joining us. Hopefully, this better news on interest rates is providing some of you with some real peace of mind. Like I say, I can't see that rates are going to step down. For those lenders who have made their chunky reductions, I can't see them reducing rates any further in the short term because their cost of funds simply has gone up actually in the last few days. Are we going to see swap rates ease back down further? At the moment, I'm not sure we will, but let's just watch this space. But like I said, I think the main chunk of reductions has now happened, and anything further you're going to see is going to be really fine-tuning rather than any big removal. If you have any questions, we'd love to hear from you, 0345 345 6788, or have a look at our website, mortgagesforbusiness.co.uk. There is a calculator on there, so if you were thinking about a mortgage and just interested in terms of how the pricing might look for you, at the moment we have a calculator online which you can plug in very kind of basic headline numbers, and it will churn out essentially lots of rate options, and these are real-time rates as well, so giving you up to the minute pricing. Look after yourselves until next week. Keep warm. I hope if you have snow you have lots of fun in it and you're not just kind of frozen cold like I am, and I'll see you next week.